Hey guys, what would you do if you want to learn a new language? Obviously, you'll start from the letters, then to the words, and then to construct sentences. Same is the case of learning anything new. You'll start from the basics. So, in the case of stock market, if you are a beginner, uh, you can see if you go into a trading platform, you will see many terms which you won't see anywhere else, or same terms, but it will have a whole different meaning in the trading world. So in this video, I have included some of the very famous and very important jargons. Jargons are the words which they use in a particular profession or a field. So I have included some of those in my video, and make sure you watch till the end because I am giving you an extra tip at the end. So let's get into the video.
Lesson 6 Jargons. When you hear people talking about stock market, you will find they are speaking many terms which are not in common use. Jargons are special words or expressions used by a profession or a group that are difficult for others to understand. So in today's lesson, we will learn about some jargons that are used in stock market. The first one is bull market or bullish. If you think stock market moves up, you are optimistic, so you are said to be bullish or a bull. If stock market is moving up, it is called a bull market. A bear market or bearish. If you think stock prices will fall, if you are pessimistic, you are said to be bearish or a bear. If stock market is moving down, it is called a bear market. Third is trend. General market direction. That means if the market is moving up, it is called a bullish trend, and if it is moving down, it is called a bearish trend. And if there is no movement, the market is said to have a sideways trend. Next is 52 weeks low or high. 52 weeks high means the highest price at which a stock has traded in the last 52 weeks. It is basically marked as a year. Same way, 52 weeks low. This can give you an idea of the range of price movements. Next is all-time low or high. It is similar to 52 weeks high or low, but the difference is it marks the highest or lowest price ever made by a stock since its listing. Face value FV. Per value of a share indicates its nominal value. Face value is important for corporate actions like during stock splits and when the dividends are announced. The typical face value is Rs 5 or Rs 10. Long position. It refers to a direction of trade, a position in market where you stand to benefit from the increase in price, then you are said to be long. Short position. You stand to benefit when the price decreases, then you are said to be short. So in this case, you sell first at a higher price, then buy back the same later when the price decreases. It is as good as going long, but you do it in the reverse direction. Selling shares which you don't own is basically by borrowing, but you don't worry about that. It is taken care by the exchange itself. So just chill and trade. Next term is square off. This indicates the closing of an existing position. If you are long on a stock, square off means the selling of the stock. If you are short, square off means buying back of the stock. Do note, if you are just closing an open position and not going long in this case. OHLC. Open, high, low and close. Open is the price at which the stock opened for the day. High is the highest price achieved during the day by the trade. Low is lowest price achieved during trade. And close is the closing price of the stock during the day. Next is volume. Volume represents the total transaction, both buy and sell value put together for a particular stock on a particular day. We will learn about the importance of volume during a trade in a later stage. Next is market segment, a division within which a certain group of financial instrument is traded. Each instrument has its own risk and reward parameters. Stock exchange operates in three main segments. First one is capital market segment. They offer tradable securities like equity and exchange traded funds. It has subsegments. For example, common shares of companies are traded under equity segment EQ. If you buy or sell shares, you operate in the capital market segment. The second segment is the futures and options, generally referred to as an equity derivative segment, where one would trade leveraged product. The third segment is the wholesale debt market. In this segment, it deals with fixed income securities. Debt instruments include government securities, treasury bills, bonds issued by public sector undertaking, corporate bonds, corporate debentures, etc. So it's time for the tip which you have been waiting for. Go to your Chrome and type nasdaqglossary.com. You will see the first link, Glossary of Stock Market Terms. This is a site where you can find meanings of thousands of terms related to the stock market. So for the time being, I will type dividend and see what comes. So you can see many terms which have the word dividend in it. So we'll go to symbol dividend and we'll see that it is a portion of company's profit which is given to the shareholders. You can either search by the letter, so we'll go with O now. We will search for offer price. Let's see what an offer means. It indicates a willingness to sell at a given price.